to reset my computer. I'm almost positive. Multi-stream. Make that bigger. I'm having some lunch here. We're back again. That's really bizarre. It says that we're part 2. Okay. Sorry, I'm trying to eat a sandwich here. There's a SPX Gamma. I got some stuff I got to do here. I turned off the. I think resetting my computer. Everything was fast again. We got 61108. We got these. We got this target up here, 60783, 60926. These are the two prior highs, and then 611 are 3 up there. I think that corresponds with SPX. Somewhere in there does. Give me a second here, guys. I got some stuff I got to do. Give me one quick second. I don't want to be eating here on the show. What do I got to do here? Edge. I swear I think shit like... I think I have like ghost programs running. Not if it's ghost, but like I think like I turn off stuff and it move that over there. Stonks near record high. We're almost there. We're fairly close. SPX trading 609651. 0 dates for today, or 1 dates for today. Massive bar on 6100. Massive magnet. I'll go over some of the news that's come out today. So we have the net gamma at 6,100. We also have McGilligot. Let's see if we can get to a full white paper. Miguel goes perversely higher. Pervertedly higher. I know it's not perverted. I should have changed it to pervertedly. I'll read you what Miguel got said. One quick second here. I'm like starving. I was up at like dark 30 with my kids. They're getting into that like summertime sleep in. No more quant. Charlie Miguel got saying buybacks too have been a primary source of demand impulse over the past few months too, which cannot be understated. Ironically, on account of the capex uncertainty consensus, as cash is not spent on R&D hiring, but instead deployed into share repurchases, driving equities perversely higher to the chagrin of top-down macro bears. You know, bears hate buybacks, of course. He goes on to say dealers keep getting stuffed on gamma and pinning daily changes into a powerful R-vol compression, which in turn has the potential for a monster volatility control real allocation flow into equities over the months ahead, i.e. 50 VPS daily XPX change projected out the next T plus 1 month equals 107 billion to the buy side from vol scalar cohort, which is boom, upside boom, you know, like verticalness, spot up, vol up kind of a trade. Miguel got as an oft-repeated truism here, the scramble into more gross net exposure ultimately sets the table for where equities are then open for a pullback. As dealers get short puts from clients who are now long enough to need to hedge against 3-month SPX skew and put skew both 100 percentile on 1-year look back, which means accelerant flow. Now, let me explain what this means to you guys. I'll give you like the idea of what this means. Which means accelerant flow into a spot sell-off via dealer short, gamma short, vega hedging. Now, big picture, what that means is this is the thing that's going to piss people off. Not me, but it's going to piss off a lot of bears. A lot of bears want to see like the next crash in their view. Want to just see it at like right around 690. Hold on here. Sorry about all this eating on the show. I never do this. But let's look back here again. You know, all these bears want. Let's just okay, just like mute all that. There we go. So all these bears kind of wanted the fear and uncertainty to reign. And to carry over into the end of Q2. And uncertainty reign, right? Worse consumer hard data. And the other thesis here was that the consumer hard data would match up with the consumer soft data. if you recall one of these past FOMCs, the reporters were dogging Jerome about that. So the idea here would be continued uncertainty, and then the beginnings of what's called a double correction. So let me show you what they wanted. They want this like first move down right here. Hold on. Just so you can see it. This is a much better representation. So what sellers were looking for was a double correction early. So you come down, right? You do your first part of your correction here. You fail the all-time high, get underneath, and then it's just bloodbath time. That's basically it. You wake up in September, October, and, you know, mud on the face. Not only mud on the face, but the important part here would be that you're firmly in a bear market, which is, you know, see you later into next year. Great Depression trade and all that kind of stuff. You got the idea behind this? And even if you're to recover, you know, you come to the beginning of the year, and then you like the back end of tariffs, and you got like China war. You know, it's like more doom, right? So what McGilligan is saying is going to be no consolation for a lot of bears at all. No, what I just read to you from him, what he's pointing out is that this is definitely not what sellers want to see, right? You have to then get long, right? Like, so you've got everybody has to play catch up now. And they need return. So they need like return on getting long. And if that's the case, how long, number one, how long does it take to get it? He did say that, now I don't know if it goes this long, but he did make a point in a previous white paper. Now he made a few points. He said we could just putt along here. But he also gave the spot up scenario, vol up scenario. And he actually gave a longer period of time that this could last. He was like, this shit could last until like September. Like a bull run, like till August. If it goes spot up, vol up. Now, here's where the fly in the ointment is. The fly in the ointment is that, you know, not only do they want the double correction here, because that's where you'd go, right? If you fail an all-time high, a major high, right, and a major low, and you fail the all-time high, you should make a new market low, theoretically. If these sellers are more than these buyers, right, and you're failing, then theoretically, you want to find a new low until you can find real, true support. It's also likely where the major Fed put is currently. Hold on here, I don't know what's going on. Got some real wonkiness going on here. Hold on. So the real Fed put is like for 0, probably down there, 4,800. Now you've got a wrench in the program here. If you're a seller, you have a wrench in the program. And that is the big 30% thing. If you can possibly trade 64, you know, you're talking about 30% from right here. And you remain in a bull market. So you're not getting the bear market. You're not getting, 4,800. And you're not using this juice in here to try to capture that extra downside. You know what I mean? So there's a fly in the ointment. You know, now you're talking about, this big upside move. As a matter of fact, we can chart it. Ah, shit. Hold on here. We can chart it easily. There's a pretty big, now we're at a high today, so, if we're burning one day next week or 2 weeks from now, people will be asking me to do this chart because we're on a down or we're down or something, but, no one wants to, Bear doesn't want to be told this right now, of course, but, here's SPY again, right? We'll do SPY instead of SPX. So you figure somewhere in there, 574, 575. Even if you get a wick, so you get a wick to like 64, but the candle, the body of the candle's there, right? That's like worst case scenario. So the idea becomes between now and, let's call it August 31st. I don't think it goes this long, but this is the spot up he's talking about, spot up scenario. People have to catch up, right? So for 30%, no, that's only 7. That's only 7%. That's it. 30 is, pretty low. So that puts you out there, doesn't it? And that's where you get these big ass like figures. This is where you get like, well, if we're going to do spot up, vol up, up here, right? We're almost at all-time highs, right? So, 630 up here is no big deal. Come down into this, this is like 1998, 1999. I don't think we're going to go that high, but you're like blasting down here for your 30. And that matches up with that right there. That's a bull trend still. See it right there? Come back down in the next year. Take another whack at it. So this is like 2026, 2027. Here's 2027. So this is raging bears. They want this down right now. I want that double correction. 1, 2, 3, 4. Or excuse me. Sorry about that. 1, 2, 3 right here. Now that also calls into question like counts, right? Now that means that you've got 1, 2, right? 3, 4, 5. No double correction. That's probably what what's his face is talking about. It actually get the new high right here. Got the prior high, new high. And your back test would just have to hold this. Right, there it is right there. Your triangle, down, up. That's 80, 73, 90. That's the precipice for your whole trade. There's like 720 right there. This is February. That's December 29th, 720. That's going to piss some people off, isn't it? You know what I mean? Like that pisses some people off right there. 1, 2, 3, 4, and 5. And so McGilligot's saying, like, you're going to ramp up here, come back down, ramp-o-rama. And then you ain't getting your 30 or even potential for 30 for your double correction until much, 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 much later. So we're not quite there just yet. We still have QQQ and stuff, but there's still time in here. There's still time in here for bears. You know, some if they can. I mean, I don't think they're going to get this point, but you know, if they were to break this triangle right here, and if they broke this right here, and they were trying to do this shit down here, right? Whoop whoop. You see it now, like they wanted this. That invalidates this whole move up. And so the farther away you come from it, there really is like a door closing on sellers here. I want you to look back on the January 2025, January 13th, 2025, and then more importantly, this like October 10th, like November's month of October, November here. And I want you to just think of it in terms of like this big fucking square right here, or triangle, excuse me. And I want you to think about, like, even if you're pulling back here, you know, and then you're down there, and call that October, August, September, that would be your big inflection points, and then you'd be moving towards, like, I'm not kidding here, like, way up here. Like, we should, Larry Williams said that we should, like, go vertical. I think it's mid-September. End of September, somewhere in there. So here's August. Here's September 2. And that would make sense. This is probably... We're not quite there yet. We're not quite there yet, but yesterday at 1:30 in the afternoon was the first of two doors that close on sellers. So this one closes this door right here. As long as 92 holds, 90. We go up there for summer, come back down. They're going to come out with a bunch of shit for you in the fall, of course. You know, we're going to come into the fall period and, you know, so that here's 630 right here. So you'll probably fail that by a little bit. Does all that make sense to you? Go up here. So you figure like a summer target of 630. Downside target would be, you know, you're hoping for like 590, but you know, you'd take like a little wick down here. Maybe you grab 64, 70, 80, 96. There's a good hedge trade in here for you too. And there's some good upside. Now what's crazy is this trade right here could be fucking phenomenal. Whatever this low is in fall, you know, if we can weather like you figure the late summer, excuse me, I'll go back to the main screen. If we can weather like, you figure between now and mid-September, if we can weather any of like the bad news, if we can weather unemployment into January, February, we can get a cut or two to ease conditions. There's a window in here to trade 720. I know that sounds a little crazy, but like maybe we fail 680 or something, and then we grab 720 in February. But when you see guys like Tom Lee saying, you know, doors are shutting or whatever, yesterday a door shut on sellers. If we roll down here for weakness in the next week or two, first week of July, and we hold 92, and we hold the quarter, I wouldn't be shocked to see the collar go higher, of course, and that exposure, that like need for exposure, need for window dressing. You could start. I don't think you can target it just yet, but I would say that like in the next 3 weeks you could target it. And you could target it again in September if like 92 holds. That doesn't mean we can't like spike down with like a quick wick, like 64, 75, or 74, or even 85 or 90. It could be like a brief moment, day or two. On a daily chart, you could have like a 3-day bloodbath or something, or panic. That's why you shouldn't be panicking when you have those events. You're like, oh my God, we're trading 64, bro. Whole market's going to go. You'll see the right people like come out of the woodwork and say, I'm here to buy. And you're talking like 64 to 720. That's an 800-point move into the end of the year. Or February. So you could do like an 800. I'm not kidding here. Like you could do a big ass move from, you know, mid-September, late September into February over 5 months. Pretty significant move, right? Now, from there, what's the problem? We've completed a 5-wave move, and whatever's coming after that ain't going to be pretty. At minimum, At minimum, it's going to be a major correction. If it's the end of a cycle, a larger cycle, not the grand cycle, but like some other grand cycle, what the fuck these Elliott waivers say, you could see, some doom. Just completing that cycle should bring some, more, more. That's the top of the top of the top of the top. That's the top of the grand cycle. Now, I do want to let you know that Larry Williams thinks that. I also think Bob Kendall is kind of on that. Most of the bulls that I know that I can think of think the same thing. They all seem to think that we're coming into the end of this grand super cycle, and you get the fourth turning and changing of our economy and whatever. We'll deal with it when we get there. So the one thing you should expect is if we do trade that, that you would expect a major correction, like a big boy of some kind of doozy, first part of 2026. If things don't recover if things don't recover in 2026 like they are right now, you would expect the summer trade that fails in 2026. That would signal a major top in the market, and you'd look for 2027 to be a viciously down year. But we're not there yet, and nobody trades that. There's no trade there. Just what I showed you, what I drew for you, you're trying to trade right now an extension up on a back test the next 2 weeks. So an extension up for summer trade. Then you're trying to put a hedge on, and the real long is more than likely in September. It could be July 31st, first week of September. Could be the last week of September, first week of October. Could even extend into, October of all time periods. It's just like a general idea. It's not guaranteed on this date. Price matters a lot. Price or time. So as long as we do price or time in that time period, there's a giant fucking bull trade in September, or in and around there. I'll say it better. There's a giant extension trade higher. That last leg, man. Woo! It's a doozy. You could compare it to so you could compare it to 2022 and 2023 and 2024, right? You could compare it to one of those years compressed into about 3 to 5 months. So 3 to 5 months, a full year of that melt up. You'd literally get long and you just don't sell. Go all in. You're your whole book, right? All in. And you just hang on tight until December or February. Something fucking outside the money. Just watch it grow. A nice big fat synthetic long into the end of 2025. I'm getting excited about it right now just thinking about it. At any rate, that's not here yet. You still need, there are inflection points. I say it all the time. There's inflection points. You still need to back test leaving this quarterly OPEX. We still need to make some decent highs for a little bit more of summer. We still are going to need to back test that fucking fall. You know how these bears come out, right? I mean, they fucking right. I watched a program on YouTube the other day. and it was like the grand bear of them all. This fucking guy had like a 10-part series, like an hour in each fucking episode, as to why we were all fucked. I was like, God damn. I was like, this fucking guy has put so much time and effort into this. And it was like well produced and well researched. Bullshit, though. I started watching it. I'm like, he's got all this shit wrong. Like severely. Like so hokey. And I was like, this guy's complicating shit, and he's like not even comparing things appropriately. Like, just like anyways. You don't need to worry about that stuff. The only fucking thing you need to worry about is, does we hold 592? If we hold that, we make a new high for summer, and then we can hold the fucking correction in the fucking fall. What the fuck you care? You don't have to care about all that stuff. Yeah, I'm serious on that trade. It's probably, now here's the scary part. If you speak to guys like Larry Williams, right? Their outlook thereafter, it ain't good. These are like Super Bowls. If you speak to those kind of guys, they're thinking that this is the last hurrah for a long time. Like these guys, and matter of fact, Larry Williams likes what Trump is doing. He seems to think that you'll get a decade, 5 years to a decade of no returns. Low, it should be like a decade in total, like a couple of years down, few years flat, and then a bunch of years to recover because of our economic change. War, fear, FEAR with China, changing the economy, putting value and revaluing the dollar, a bunch of stuff. It would benefit you as a worker, theoretically, although I don't even know if we'll be fucking working anymore at that point with basic universal UBI. I'll still be alive, I think. If you're a kid, you're probably fucked. Or if that's all true, and you are, God, if you're not under the age of 10, maybe even younger, you're probably going to be fucked in this whole process. I don't know. I've thought about that. I have to go back and look at it more clearly, but if we're going to make this like fourth turning bullshit and whatever. But at any rate, the point here would be, if there's one last big hurrah trade, as a matter of fact, too, if I'm still streaming them, which I think I will be, I don't see why I wouldn't be. We then have to start talking about, we were supposed to start talking about that this summer. We haven't gotten to it yet. We said we'd talk about it in the summer months, but we haven't had a chance to. Maybe we should start talking about that stuff, but we really want to start getting into your lexicon, an idea of staying away from indexes unless you're intraday trading, in terms of like investment, and maybe be more focused on other investments within the stock market, single issues, emerging markets, maybe. But we're not there yet. So, but you would see a lot of majors not give you the returns that you're looking for multiple too long. You'd be break even, and then like the cost of all that, the carry cost, the cost of owning money, and by the time it recovered in an index, we're not there yet. So that's all, like, as far as I'm concerned, I look at that stuff like it's pseudo tea leaves for traders to bullshit about. You can't, you're not going to know any of this stuff until you get to that time, right? You get a double correction in 2026, and it's not that bad. All of a sudden, U.S.-China makes up. The economy is running hot and good, and The economic change wasn't so bad. You know, all that shit could change. So you hear this every year, 2, 3 years, 5 years, start hearing like talk of this kind of stuff, and the show goes on oftentimes. So, but stay focused on this, what I just showed you. Like, stay focused on that kind of stuff. Like, do we hold any kind of bloodletting next few weeks? Do we start making some good highs for summertime? Give a good back test in the fall, and be prepared. And that's the biggest part here. Like, even right now where we're trading, the biggest trade is probably that fall trade if you're a bull. If you want like the big trade, probably sometime in the fall, and it could turn you into a millionaire. I'll be ready for it. I want you to know that I'll be ready. And that should be like the last hurrah. If you're looking for soliloquies or similar experience like that, we did some of it in 2019. I think the better example is the 1990s. And you relate like tech to AI. And we get some good volatility, big downside moves, but then they result in like even bigger upside moves. You get like a 3-day bloodbath for like 30% or something, but then it's like a month later, it's up 50, 60%. That could be the worst of it, I guess. And you just hang on tight. Yeah. That last leg should be a doozy. You guys want to trade some zero dates right now? I got a put spread on right now. I'm down to trade some zero dates. Someone was saying about calls. I sold my calls earlier today. I was fucking around with bullshit show stuff. Okay, so it's 1500 right now. It's almost 3 p.m. I'm going to give you a brief expectation before we get to 9 p.m. when the Asian markets open, the Asian riches. Doggone it. So the Asian riches and the Euro poors. And we'll take a peek at some expectations into tomorrow. Now, I do want to talk to you about this same chart, this SPX chart again. No, I'm in the wrong shit here. Let's go look down here. I do like the idea of pinning market in. Into right about here. I like the overall idea of pinning market into about the 27th. Now you've got some volatility in GDP, durable goods. You got PCE over here. If you can catch any kind of a dip down below here or even on the half hour up here, buy it. We should like grind and then have a quick downside move at some point up, downside move and upside up, right? And I don't think we have a chance to unclench until the 27th. The 27th is hold on here. This is PCE. This is the first chance to unclench. So if you get a hot PCE report, like grind, and you can actually get some downside movement. Now, you also have on the the 30th right here. This is month end. And then you get some jolts on the first. And I think you get ISM manufacturing or something, but you get jolts. PC, month end, jolts. And then you get the big boy over there, which is NFP. I think that's on the 3rd. You get NFP, unemployment. Month end, typically we get not a bloodbath, but we get, so what happens in month end is you get, hold on here. If we're trading up into month end, right? You'll get like an end of day ramp, and then we'll come back and the hedging flows, the rolling of hedging, and collars on the market for volatility will come in. And those will start to impact the market negatively, typically. And you'll get some blood. And hopefully we're trading down into NFP. Get a little bit of a bloodbath. And we fade the move right after an hour. And then this could kind of signal like a, trade sideways for the July trade. And that also leaves these guys down here. Whoop. Worst case scenario. Month end, right? Bloodbath, get some jolts. Oh, that's terrible, right? Oh my God, NFP. Terrible, whatever the fuck that is. We're even down, even worse, right? Oh my God, it's horrible. I'm trying to give the Bears a chance here. Like PCE, month end, some doom, right? A little bit of jolts, doom. Oh my God, NFP is gonna be horrible. We get a bad NFP. Worst case scenario. Come back in the 7th and we're up and out of here. Now, if you want to see a couple examples of this, I can show it to you. Even in a bullish time of year. I can show this to you in a couple different places. You guys already know about, here, I'll show you this one. Very common in a summer trade. No, wrong one. Yep. What am I looking for here? So here's 21st, right? Blooding down all the way back up again, but it's see right here, wham, right after the 30th. You get one more chance to get long. Usually it's like the first week, but we're in QQQ, so could be the 3rd, could be the 7th. There's a range. I'm going to show you a previous bull spot up, vol up example. Here's one right here. Oh, this is a prime example right here. I've shown you guys this as the example in the past. This is just remember, we're up here, right? This is where we are right now. See that high right there? Whoop. See how it stays in trend? Stays in trend. And then we unload to the downside. This is the 2nd of July in a very bullish year. There was still a low to be had. Show you this here. Right? Bears taken out here. Bears taken out here. Bears taken out here. 3 soldiers, right? 1, 2, 3. Then they let him out. Whoop. By the 3rd. And then we're off and running. So this is a very bullish year, by the way. I think this is 24. If you want to see 23, I can show you that one. Nope, that's that one right there. Oh, that might be 20. Hold on here. I don't know why that's not showing right now, but I'm getting wonky right now. The thing is getting all jacked up. Yeah, right in here again. There's one right here. In this case, they ramped us up into the 30th of June, right? And then blast down again, first week or two. This is to July 11th. Or the bottom here was, I think, the 10th of July. And then Ramporama. In most examples, at least historically, there's, you could buy dips in here and shit. But in this zone right here, be very careful of, month end, NFP. Down to the 7th, it could be here, could be here. You're just Johnny on the spot waiting between like the 3rd and the 7th to be a buyer. Does that make sense? Now, in an off chance we break out in a way, sure. I want to tell you that's not the norm. It's not the. If you were to take that trade this time, likely is not. It's likely not. It would be a one-off. It's not the norm. I did post for you today, or repost for you, the summer trade of the last 6 or 7 bull summers, and they all have some blood, like 30th. This time we've got like NFP on one side, PC on the other. I do it like 27th to the 7th. Give yourself a range. Give yourself a buffer. What I hate is when someone will tell you, like, it's going to happen from the 30th at 9 a.m. until, I don't fucking know, July 3rd at 4 p.m. And then it happens early. You just need to be aware of it. So if you see the signs of it early, you're like, oh, okay, we're going to start rolling here. Or, oh, we hit our upside target. Okay. Price or time, right? You got like a window for time or price. And you start entering another window of some weakness, I guess. You just want to be aware of it as we head towards it. We're in the back half of this whole trade right now. We're in the last 2 weeks of it. Stay patient. Stay vigilant. Be patient. I'm begging you. And there's a reason I'm begging you for this, because like when you come into this like end of this trade, you scoop up that nice fucking sexy low if it proves itself. Scoop up that nice fucking sexy low. We run it up in the middle of summer. And we're going to go run through it all again. We're going to run through people saying we're going there, we're going here. We're going to enter another one of these periods. And we're all going to be waiting together as a group in that fall low to put on the big trade for end of year. While all the people are with their hair on fire, you're going to wind up being green end of the year. Instead of trying to scrape fucking $1, $2 or whatever. Trade with the market. The more you trade with the market, the easier life is for you. The more that you don't have to worry about, I don't know, just the bullshit. So many if this, what about that, and 5% chance of this, and 15% chance of that, and 2% chance of that, and even if it happens, you can't trade on that shit. Like you really can't be like, I'm going to take 100 trades and they're all going to be a 5% chance. You will be washed out. Stick with the market. Stick with proven. You know, it's kind of square and boring, but ask anybody out there. They'll tell you that I'm telling you the truth. Yeah, I was eating a sandwich. Am I even on stream anymore? I don't even fucking know. I could be talking to myself right now. Cool. I see you guys in the Discord. I'm looking right now. Just be chill. Like, it's like, I'm telling you, it's like a way better way of living. The nightmares go away. Like, for years, it was always like, I got to make this money before 4th of July. I got to make this money before Christmas. I got to make this money before the New Year's. I got to make this money before this. And I'm working within and oftentimes you get trapped in like OPEXs and QUAPEXs. And you're like, why are we not doing this? And why are we not doing that? And you like forget about the cycles of the market. And you're like, God damn, man. I just want that melt up scenario where I'm long from a bottom. Everybody's scared. And everybody's bullish. And everybody's scared. And everybody's bullish. You're just kind of doing your own thing. While everybody else has their hair on fire. And you'll always get questioned at major lows. You'll always get questioned at major highs. You'll always get questioned if you go outside the range. Those are all fucking chasers. You just like blinders on. Seriously. It's like life-changing stuff. It really does changes everything for you. Promise you. Yeah, this like 92 is a serious thing. This like 92, 90 area is like a pretty, even if we can spike down, but as long as we don't make new lows below 92, 90, like any new lows, like we can make the one low, but not the second one, start rejecting. This is a huge inflection point in the market. Massive for the last leg higher. I'll take a 0 day with you. I'm not ready for one right now. But didn't I take a 0 day with you earlier today? Thought I did. Swore I took a 0 date earlier today with you. Here's what are we at right now? 5. Oh, so okay. So one more. Jesus Christ! I'm getting out of. I never did the actual like preliminaries for tomorrow. So, let's look at an hour chart. Let's do this together. I do these twice a day anyways. Let's look at it right now. Let's do one together in case I don't do one for you and you want to do your own. Okay, let's take a look at the market. It's a good time to do this. Get rid of the pivots for a minute. Okay. Let's go to a monthly basis. Now, this is preliminary Y. Why is this preliminary? Can anybody tell me why? I would love if somebody just said, because we're waiting for the next market to open, Cappy. Why are we waiting for the next market to open? Because we offer a pricer at a low or a high to the next market. We want to know if they're going to buy or not, right? Is Asia going to buy or are they going to wait? Europe going to wait, buy? Are they going to sell? Is there some overnight news that's doom and gloom? Remember, we haven't had any. Now, there's a little box right here for a monthly. For now, intraday, we probably don't need to be marking this one off on a monthly basis. Not for right now. 572 seems reasonable for today, for an intra week. I want to show you something really cool too. Yesterday in the afternoon, we hit the weekly low. In the afternoon. So there's the 1 week. And I want to show you this. This is really cool right here. So if you want to know if we're bullish this week, fuck yeah, we are. This tells you right here we're bullish. As long as this week holds, you can see it on Monday. We went wham, slam on a weekly basis and held. You got your weekly low in at 1 o'clock yesterday. That's pretty good. As long as you hold the week. That's 592. Shocker. Why is 592 important? Talk about that all the time, right? 592, down, right? Back up again, down, back up again, right, down, back up again, down, up again, down. Right? Bloodbath. Up again, no. Up again, no, no. Guess the way is higher, right? Still have not tested that either, have we? We actually don't even know, do we? We haven't touched that yet. You touch that with a prick. Theoretically, we can go all the way down. Theoretically, we can start testing monthlies. Start testing that weekly again. You know what I mean? You can see it here, up, down, up, down, up, down, up, down. What? Not easy, right? And this is your prior high right here. So you get your weekly anyways, a monthly down here. Pretty fucking bullish sign right here that we're at least going to test this all-time high. Right? We are going to test that all-time high, guaranteed. We can say that right now. On a daily basis, yeah, right here. Can actually come back and do the daily again. Interesting. That looks like it's got our name on it for end of month. Maybe the first week of July. Get some more dailies down here. I bet you David Amos is like, I would love to take that one out, Cap. I would love to take that one out too. This is where the pain is for bulls, by the way. Even if we're going high, one of the pain trade is, it's right here. Here is pain. And here is pain. There is no bull thinking that we could come up here and just wick 582, 589. Just a quick old wick. There's no bull expecting that at all. So that's good to know. On a 4-hour basis. So there you go. We got an all-time high right there. We can start looking for, here is where we can start to look for pullbacks. So do I think we get a 4-hour pullback? Maybe, probably not. 90, That's 98. I don't think so. Not right now. Maybe if we touch that live wire right there, maybe. Not today, but we'll hit it more than likely. Right here, 1 hour basis. Check that. Let me just check that 4 one more time. There's one more right here. This is the pain trade on the 4 hour. There's where you get your wick on the 4. Leaving behind a bunch of 1 hours, right? Beautiful. That's bullish. That's bullish right there. Bullish. Boy, I'll tell you what, we get some bad news, though. Oof. So real support sits at 598, 93, 598, 37. That's real support as of right now. Put together some more 4 hour periods, though. We'll start switching these out to 4 hour supports, though. This will turn into support. Close of business today as long as you don't have a horrible overnight. On an intra-week basis between now and Friday, if there is going to be a pullback, between now and Friday, your jump point is about here. Shouldn't expect anything lower than like 603, 604. You might get a wick. But you should hold this. This is your poop island. Into the end of the month. You know we like coming back to Poop Island, right? We all know what Poop Island is. Go back over here and check just a few more things on an hourly basis. We're going to look at these prior highs right here. And I want you to see this right here. So we're going to mark these as prior highs in white. And then we're going to, on an hourly basis, take the first lower red candle, like this one, this green candle. Green candle, green candle. And then we're going to take the first red just below it. And we're going to snap some lines in right there. There. Make that one yellow. About there. About there. Matter of fact, we'll make that one red. That one red. The red just signifies a prior high on an hourly basis, okay? Fairly easy, right? You can just look for where's all-time highs, where are the sellers going to try to come in, and check it out. So we already smashed through a yellow candle or yellow line back here. And you want to see, do we pierce? Like, do we pierce the red even if we turn around? Do we reject? Do we go above it? Do we make the new high on that last candle right there? We do this one right here. Make sense? You got this last yellow one, this last prior high right there. We're in business now, aren't we? This is the pain trade. This is real support, at least on a 4-hour basis. I think that was a 4-hour candle down there too. I don't think that's a 1-hour. I think that was a 4-hour. But we'll just leave this one. This is all we need to know is that 4-hour down there. Pretty good outlook, right? Let's check 30-minute velo. Getting a little long in the tooth in velocity, but it's supportive. We are getting a little long in velo, though. If you look at here on a 30-minute basis, take a quick look here. You can see we start normally distribution right around here. Start distribution, start distribution, start distribution. We're above it already, but we're getting pretty close, right, to a top. So we're going to think about distribution at this point. You know, something like that. Back up, but it should hold. Daily velocity is improving. We're getting good daily closes, so I wouldn't expect too much down. This is Friday close. We got what? We've got Wednesday from, Wednesday from 10 a.m. Let's call it 2 p.m. J-Pow. Thursday, durable goods, 8:30 in the morning. Oh, GDP. Friday, we got PCE. We got a bunch of unknown shit. We got we can't account for any Trump shit at all. So if we're thinking that the roll comes and the trigger is the 27th, this is 10 a.m. tomorrow, right? I already got that. 10 a.m. tomorrow. Thursday, 1600. Catch a high, roll everything, start our way down. There's all-time highs right there. $27th, 30th right there. Where's the 30th? 100 right there. Now, time and price, okay? This could happen sooner. And then we make our way higher. There. You're lucky if you get 95. That looks right, too. Ramp up for this. Man, I hope we don't fail that. I hope we make that all-time high in there. That tells you that that's going to get bought. Whoop. Right about there. That's about it. You could say maybe kiss that, maybe. There can be an argument made that if you did 3 white soldiers, this is your 1 move up. And this hourly trigger will hold. And that would take you up into the 27th. This would be an alternate count here, up here. There can be like an alternate count here where you like hit this. Because this would still be distribution. And then you get your bad PCE, then you get your bad. There's some room for interpretation when this happens, if it happens back here or over here. If that was the case, you'd hit this one right now. Hold this. Get your all-time high before, or not, instead of after, you'd get it before, like the 27th. Get your bad, your PCE bad. Your NFP or end of month bad. And then your doom and gloom for your other shit over there. So there is an alternate count here. Here, if you want to take a snip of this, I'll give you the alternate count with a pen. You would hit this one right here. And then hit the all-time high right here. You could trade this with just if it holds, if like hourly trigger holds, makes a new high. Take that trade. You'd lose the PCE. You'd lose month end at some point. And you're off and running. You can snap that if you want, if this holds. 2 outcomes. I can't tell you if this happens early or late. There you get like one more bump up, then it's bloodbath after. It's time. It's either early or it's going to be late. Time or price. The only other thing I would say to you here, like a real outside of the range outcome, would be that we just grind this. But I don't see the half-hour triggers right here. It's possible we grind this, like grind. The only thing I would say to you would be I really don't care where we are at price on the 30th. I don't give a fuck if we do this. I don't give a fuck if we do this. I don't give a fuck if we do that. We get into that window right there. You're risk off. I don't care if we're down here. Risk off. Stay out of market as a bull after the 30th. In my view, I don't see any historical example of us breaking out. I don't know, fucking something like that. And we're like off and running. I don't see that scenario. It's a 5% chance. It could happen, but it's literally a 5% chance. So I'm not going to take that into account. It's not worth trading. You can trade it intraday. But I do think it's. I think when you draw shit like this. I think when you look at stuff like this, you should never be looking for like this kind of stuff, or like you should always be looking like down here for that next long, wherever that next long might be. You could argue that if you break out and you hold this, and the hourly trigger chases, sure. But it's you're not even there yet for it to happen. So I think it's an outside the range expectation. I think it's untradeable. Well, it's tradable with it. I think it's tradable intraday or in a back test that's tradable. I don't see it right now. I don't see it as anything that's worth your time. This looks like the reason if you want to know why I'm saying this is because this looks like distribution. To me, it looks like distribution. It's going to take a few days, but it looks like distribution to me. And I hate distribution. It's like musical chairs until you get caught in it. Even in spot up, vol up. I get the spot up, vol up trade. I get it. I understand the spot up, vol up trade. I get it. I get it. I get it. I can't tell you how many times I've been in a spot up, vol up trade in like, it's like we're going to the spot up, vol up trade. We still do, but it's like there's that 1 week where they just fucking flush everybody and you're like, fuck. And you get flushed and you're just like fucking holding your dick in your hand. Even when you do the spot up, vol up trade, just like that one fucking fast flush. And it's like a dealer special. It's like no courtesy of a reach around, and you're upside down, and you're just like, God damn it, I've just been patient. So that's it's 323. That's probably the best. I think that's probably the most logical outcome. Maybe I'm wrong. We'll find out soon, though. We normally do find out, and I'm normally right, though. I'm right like 7 out of 10 times, so I'll take the 3 that I lose. What else do I have here for news? I'll read a few more things, too, before the end of the day here today. New York Fed's Chief Williams says inflation still elevated, growth slowing, policy to stay restrictive amid uncertainty. Manufacturers indicated that over the past 6 months, the cost of their tariff goods have risen by about 20% on average. For service firms, the increase was about 15%. That means they're gouging you. The survey's key finding is that about 3/4 of respondents in both sectors passed along at least some of their higher costs to their customer by raising prices. They not only they pass along costs, I assure you that they're going to have a kick-ass Q3. ER season should be gangbusters. Hold on one second here. Just a heads up that we're having like tornado warning where I live right now, so I might lose power. Just heads up to I could lose power before the end of the day today. We're having a tornado watch right where I'm at or something like that. We got like major thunderstorms, lightning where I live. I just had someone come tell me. So Williams saying the survey's key finding is that about 3/4 of respondents in both sectors passed along at least some of their higher costs to their customers by raising prices. They're lying to you. I'll tell you right now, your Q3 earnings are going to be blowouts, literal blowouts. The consumer is still not saying no. They're still not buying shit. You may see a little bit more refined what people are buying, but people are still spending money. Q4, I'd start to think Q4, Q1, Q2 next year, and we're going to have a problem. Now, given the continued uncertainty, the solid labor market and inflation still above our 2% goal, the FOMC decided at its meeting last week to leave the target range for the federal funds rate unchanged, maintaining this modestly restrictive stance of monetary policy is entirely appropriate to achieve our maximum employment and price stability goals. That's horse shit. They're going to cut for you at some point, I think. Unless this really is transitory, but I don't think it is yet. I don't. We also have the VIX dropping to new session lows. Just a heads up, if you're a VIX trader, if you understand anything about deltas on calls and puts. Remember, this is not spot up, VIX up just yet. So we have a lot of cheap, dirt cheap puts out there. Whole fuck ton. It's a great bear hit and run strategy. We have VIX getting murdered today. U.S. Treasury Secretary Bessent, we are on track for a vote, hopefully on Friday. We can finish with trade deals after the July 4th tax bill. So we do have the potential for a vote on the big, beautiful bill heading into this upcoming week. There are some news stories saying it can't be passed this week, but just a heads up that you're looking at the big, beautiful bill. Then you're looking at the tax bill on July 4th, and then the spending bill, the tax bill, and then you're looking at tariffs being wrapped up supposedly by after 4th of July. This is stuff that should propel the market higher. Wrapping all of this up in the next 3 weeks. Bessent says that the United States is never going to default in national debt, but we're getting close to the warning track. That is true. I posted something on Twitter from Wolf Richter showing where we're at the debt ceiling right now. It's about to explode to the upside. Down the road, that's bad for the United States of America, but when I made that post, I said, I think I labeled it the party of, I think I labeled it like the party of saving money or some shit like that. And lo and behold, they're as bad as the Democrats, and the Democrats are as bad as the Republicans. All these guys love fucking spending. And that's what America's built on, right? Reserve currency. Spend money, baby. Deficits are good for bulls. If you're a bull out there, the debt ceiling being smashed into and the deficit going crazy, you need that for a bull run. Well, I know if you might be a bull and saying, fuck that, I want to bring the deficit down, my Main Street hat, and I want to bring the spending down and all this other stuff, right? Which you guys all talk about everywhere. But in truth, if you're a bull, you want the debt ceiling raised and you want the deficit to grow. That is a key fundamental to a bull thesis. When you don't have those things, the bull market is over. I'm sorry. So we got Bessent coming out and saying that this afternoon. What else do I have for you guys for another day? It's now 3:29, half an hour left. If we do get a squeeze, look at 350. I don't know that puts will be on bid today. We don't have a bunch of nightmare fuel that I can see. Nothing's phasing this market right now. Take a look and see if there's any doom that I can see. Yeah, I don't see any like Iranian air defense drones, blah, blah. Nobody cares about the news today. Nobody cares about Israel and Iran anymore. Makes you wonder if we were even trading against that news, which I actually question if we really were. Bombing of U.S.-Iran nuclear facilities set them back by months. We can deal with that in the summer doom trade, end of summer, early fall doom trade. Just adds more fuel to that bullshit trade in the fall. Bears will have a bunch of bullshit to talk about in the fall. War back on again with Iran and Israel coming to you soon in mid-July, August, September. What else do we have here? U.S. equities, Rebecca Chong. The bearish setup is building up. Despite a violent short squeeze, 4 million intraday recovery fell below 15%, returning to the neutral on June 18th, suggesting a weak discretionary risk appetite. SPX has shed 11% and QQQ is down 13% on average. Oh, God. All right, if you're a bear. Oh, God. Fucking bears. Fucking God damn it. God damn Rebecca Chan coming. You know what? Oh, wait a minute. The curve's steep. Oh, God. Here we go. Oh, we got McGilligott coming out with some shit, too. God damn it. Did I already show the McGilligott shit? Oh, God. Got more fucking McGilligott. Okay, if you're a bear. Goddamn bears never fucking give up. God damn. McGilligott's on a fucking tear today. Ugh. Okay, so this first one is for... God damn. I got to get the white paper on this. Hold on here. Ugh. At bears. Fuck. Hold on here. God damn it. Fucking bears. This next one's for Vol Wiz because he really, and I like this guy too. I like him a lot. This is for Vol Wiz. I can't say I don't like me some Charlie McGilligott. He's like the guy, the Maverick of Wall Street for me. I like how he writes too. Now, what McGilligott's not telling you in this is that vol control gang and asset managers will be long as fuck even if the CTAs are leaving. See, this is some fucking ohm. God. Heads I win, tails you lose. Fucking goddamn McGilligott. And then I think that's all I've got for today. I think I've gone through everything. You've got a bear case here now, a new bear case if you're a bear. If you want a bear case for like bulls don't hold 90-92, first week of, you see like, I don't know, PCE deteriorate, NFP Unemployment numbers. Then they start hitting you with this stuff over here. Fucking Christ. For the Bulls, we already know this. Over the last 25 years, NDX has delivered an average return of 2.1%, the third strongest month of the year behind October and November. NDX has printed positively in 16 of the last 17 years, 95.4% averaging a 4.6% return. A note to you. If you wanted to long something, if you see a pullback in Apple, long that shit at the end of the year. Apple, I told you that Apple will be the late bloomer. It's already started pumping. Apple is my pick for the fall winter best print. I said that to you a few weeks ago. They had an event, and I told you just wait, buy a dip on those on Apple, and ride that shit out into the end of the year. Even with any pullbacks in fall and in the late summer, early fall, Apple should be the star performer. That should be the ticker that holds the whole market up. You'll hear people say, "Oh, Apple's holding the market up." I got some more stuff for that, so you're not going to get it today. But July 3rd to 7th, I'm going to wrap up the quarterly preview and make it a quarterly brief for Q3. And you're going to see some beautiful charts in there. I already have them. I just don't want to show them to you so you don't get crazy early. And I'll give them to you like between the 3rd and the 7th. And it's going to give you the outperforms for Q3. What else? Oil, even though it's down, is going to go back up again. And it's going to be a seasonality thing where it's like bullish for a long period of time. We're not quite there just yet, but there will be that trade at some point as well. It's in that same package. I think that's all I got for today. Tomorrow I'll see you again at 9:30 in the morning. We will be looking tomorrow for another Senate hearing. I think tomorrow it's going to be, from what I recall from this Senate hearing, day 2 is a lot more derogatory. You get people like, you get the meanies out tomorrow. And you get like you get the mean people in the second and third tier questions as Jerome wraps up his testimony. It's normally the worst of the two. The best of the 2 days is usually day 1. Day 2 is normally like when the shit comes out. It's kind of like the second, third string in a FOMC meeting. If I have enough time tonight, I will try to look at previous testimonies, second days, outcomes, and see if there's any edge. There's like a percentage edge on day 2. If there is up or down, I'll let you know in the brief tonight. But I will take a chance tonight, or I will take like an hour or so tonight and look back the past, 5 or 10 years or something. Try to catch an average for outcomes on day 2 of Senate hearings. If there's any kind of edge either way, I'll let you know. Unless some of you guys have already done that. I'm assuming that you haven't, but I do want to see what the edge is on that second day of hearings. I also want to see if there's any cuts announced. I thought it was usually day 1, or rate hikes. I always swore it was day 1 when they did it, but I can't recall right now. My memory is failing me as I get older. We're in distribution. I assure you of that. We are 100% in distribution, even if you don't see it yet. Not big distribution, just some kind of distribution. You haven't gone nowhere. You haven't gone nowhere since 2 o'clock. There's a 2 o'clock high right here. We're still parked. Where are we at? 607.65. 607.46 was the high. I would like to see 608.25. 608.50 would be nice too. I always like those like round numbers, like zeros, fives, tens. Then I like $2.50 on either side of all of them. I like like the 62.50 or six. It was $60, like 62.50. You know, if we're heading higher, then I like 67.25. Then I'm coming back up again. I like hitting like the zero and then the 2.5 above it, or at least watching what those numbers are. See how strong sellers are there, or buyers, or whatever. It doesn't matter. Yeah, I don't see any other way. I just see distribution. That's all I see. Too old for that shit now. What else? I think that's all I got. I am fascinated for the July meeting. I hope Wolf Richter puts out like a strike these words and add these words kind of thing, because there was some major verbiage change today, or expansion on verbiage, I should say, from the Fed policy standpoint. More explanation, and it all seemed in line with me. I was hoping for a cut today. I'll be honest. I went from no cut yesterday. Well, what I got from him today is what I expected yesterday. And I was drinking the Kool-Aid a little bit on a cut, because I'm like, man, they're really talking like they might just announce a cut today. And they reverted right back to what I expected. So no cuts for you. I think you catch the cut in whatever the low is in September. You got like 2 Fed puts, I think. I think you got a Fed put under anything underneath 90 permanently. I'm assuming the fall, like 64 to 80 or something like that. If we get that low, you get a put there, and I think the other put is at 480 for now. It changes depending on where price is over time. Yeah, that's definitely distribution. That's without a fucking doubt distribution. Matter of fact, I'll show you guys a little something here. This is why I can't seem to time this. See this right here? I'll show you this. See this right here? I think we're right about here. Let me show you. Let me blow this up for you. So I think we're right about here. I just can't tell if we bloodbath like tomorrow or later in time, but see that wick? So like blood up here, shank, shank, shank. And then you like finish up there. Still distribution though, because you're going whoop. It's definitely distribution so far. You can look at the dates of the 10th through the 11th. Just the look of it. It's just like it. Candles look the same. think, do we have FedEx today? Do we have FedEx earnings today? I can help a little bump after the close. I think we get FedEx after the close today. Let's look at FedEx really quick. We got a few minutes left. See if there's any trade here last few minutes on FedEx. 347 right now. We're going to take a peek at FedEx. Ooh. Man, any lows buy on FedEx. FedEx looks fucking gangster. FedEx could propel us up overnight. FedEx looking juicy into this close. I like call spreads here in FedEx. You might get a quick knife down to like 208. Let me rephrase this. Ready? Let's go look at FedEx really quick. On a weekly basis, it looks fucking phenomenal. So that would mean on FedEx, you're buying weekly lows. It does have a little gap to leave behind here. This could get left behind right now, though. What I would say to you on FedEx, though, is if you catch it today, great. Keep an eye on these guys today. But if they don't, that doesn't seem out of the realm of possibility either. And you could be looking back here on the 3rd. But this is ready to break out. This looks beautiful, and its velocity looks great. So I don't know if you catch that today. I don't know if it's like this. Set an alert, though, for like 210, 208. Maybe they can wick this. Quick wick down. If not, if it goes higher today, and you get a nice little, like, you know, if they do the call side first, then the put side. There's a better trade after if you get like a good report, and they print the put side, whether that's today or next week. Look down here for a call spread end of year. This looks beautiful. This looks outstanding for an end of the year print. Now, I can't tell what they're going to print first. And they can print the call side, then print the put side. Or they give you a little bit of a bump here. They print the put side first. Just make sure I'm going to set an alert for myself here. Man, I'm out of my fucking mind not wanting to buy this. Fairly bullish. And that's a beautiful thing right there. Look at that. I'm a little aggressive with the... But, you know, that's like a good, like, see that right there? That's gangster. Like this trade right here, this is that same trade. You see it? You already hit this low. You're pretty much, you're fucking there, man. And this is the bear market low right here. So you're right back to, we're not in a fucking bear market, so I don't think that you get that low. I think that's it right there. Maybe you catch that one. I'm pretty bullish here. $208, $210, any drop down there. If it's like an options thing, I'm fairly bullish on the trajectory of FedEx. We're not in a bear market. We're not in a doom cycle or anything like that. We're not at the end of a cycle like we were in 2022. Any kind of if it's just an options thing, pretty bullish on their report today. But if you see like a ping higher and then we're printing the other side, or if you see any bullshit like too many calls come down here, murder them all, then we're off and running. It looks like an AMD kind of a setup to me. But if you see anything down here, 216, 211 turnaround, pick it up. Oh, I forgot to put in the 250, or I forgot to put in the 350, my bad. You get the bloodshed down at 250, then you buy it, then you sell it, right? Forgot about the blood candle at 50 and then the buy. I should have put that in for you today. I apologize. The only thing that's sketchy about this is puts have been on bid. Been on bid since for a while now. Every fucking close been fucking puts on bid at 350. I would love to see the turnaround here. Be a nice little bookend for I haven't seen puts on bid like this in a long time. Every day at close. The geopolitics and all the uncertainty. I've never seen. I don't know if I've ever seen this much uncertainty. 2018 maybe. And before that, it would have to be Volmageddon and a long time before that. This is the low. That's holding. That's good. This is I think that was the end of the show. So as the end of the Senate hearing, that's the low. It's holding right now. Yeah, FTX has earnings after the bell. I'm if you can catch a low on it, buy it. It's I don't know if it's sometimes the options market will fuck any stick ticker. If you see a quick flash down there, grab some stock, or if they hit the upside and the downside to murder the calls, get down there and buy some call spreads, synthetic longs for a year or two out. I think it's a great buy. Everything looks good on it. Its daily velo on weekly looks great. Its daily velocity looks really fucking good, which is big macro stuff. You're ground floor level. Yeah, overnight longs were good too, right? Overnight longs were good. Think about that tonight too. Think about where Asia is. Where do they want to buy? I don't think they're going to buy tonight. I don't think London's gonna buy either. I think London's like way down here. I think Asia and London are like for tomorrow they're lower. I guess they could. Shouldn't say that. Maybe maybe Asian market and London market would buy 605, 606, and then get out for the close for Euro close. 605 to 608 be a nice trade for overnight. I'm looking to see if like Asia shows up. I'm gonna show you that really quick. So if I was in the Asian market, or if I was in the Asian market, or I was in the European market, I'd be trying to buy this, be out by, 10 o'clock in the morning, something like that. It's likely coming down after the bell tonight. Yeah, I always like looking at like 9:30 at nighttime, then 2:30 in the morning. There's a trade higher for both markets. Whatever 605 is in SPY. There's a bid there. Maybe a little bit of excess. You know how fucking they like to let it blood it as much as they possibly can. Like 605, 603. Bid it up into like 10 a.m. Give it to the Americans at 10 a.m. and see what they do with it. New York. Fuck yeah, Volwiz. Woo! Look at that. Look at that shit right there. Horse trading. Tell me Quapex still isn't going on. God damn. Here, I'm going to show you guys something really quick. It won't matter for sentiment. I gotta say it again to you. I'm gonna write this down. The only thing that matters is 5905, 5880, 5880, 5905, 5920. It's all that matters. I will prove it to you right now, and I'm going to explain something more important to you right now that you're not thinking about. We're going to talk about it right now. I'm not going to show you gamma. I've already shown you that 100 fucking times, but I'll show you gamma. I'm going to show you a couple things. Hang tight. We're going to go over this right now because you can see that a lot of you are not considering everything. I'm going to show you this. So, I try to tell you guys this, that if you make a trade or a bet, there's sometimes that trade is a magnet or a repellent. Not only that, but we'll sometimes hit that target when all those options are worthless or just after. Not always on. And the magnet thing and the vortex thing and the repellent thing, we're going to talk about that right now too. So whenever I tell you guys, let's say you're going to put a hedge on. We're trending up. And I'm like, if you're going to put a hedge on, put it a week after month end. So if you get the print on everybody and their sisters on 2 trades, they're on OPEX and they're on month end. So if everything's wound up too much, you'll sometimes see a print before OPEX, or you'll see a print after month end. Sometimes it's a month later. When you see like you unwind, if you try to unwind a quarter, sometimes it takes the first month. And I'm going to show you this in a minute here, though. I'm going to show you a bunch of stuff here. So I want you to think about where everybody else is and where you are. Forget about everybody else. What do you think about you as the retailer? So we are still in we're still in Q2. Don't forget that. We're still in Q2. We are not in Q3. And I want to show you real simply, real basic shit here. That right there. This is 5,900. This is 5888. Still there. Now, theoretically, this is the gamma flip. The really goofy looking one. But the thesis is that this is like neutral gamma, and this is negative gamma. So theoretically, we can still swoop down here like right now. Easy peasy. And not only that, in this window of volatility and movement, we'll sometimes swoop down there just to hit it before coming back up. Now, we don't want to lose this, though, at all. And we definitely don't want to be under here after or when we roll the collar. Now, after the collar, you can roll down there anything you want because the collar is up higher. Now, let me show you something here. It's important. This is where you get the juice of this stuff. I know I'm right here. I'm telling you, I've been too long I've been doing this shit. I want to show you some examples here. And this is important. When you see things like magnets or we're attracted to this, then all of a sudden we're not. We get some movement. We get some more movement. And then, believe it or not, later in the quarter, we're down. You see that magnet right there? And then you get the flush after. You see that? So my point to you is this. If right now we're magneting, right, we pop the collar, we're not able to break below. If you were watching weekend price action, this is SPX, but if you're watching futures and weekend price action with CFDs, we're like fucking slamming down here. We're fucking slamming down there. We're fucking slamming down here and down here and down here. That's all collar. But we can swoop down there for a minute. We can actually swoop up here and then in the fall come down here. You know? Just like we did in the past. So when you're like, oh, you know, once we're out of this, we can't go down here. Do not believe that. This is 58.80 right here. So if you come down here, right, you're just like, whoop, wick. That is very possible. And not only that, if you get under here and start rejecting it, it's bad news. So, like, to say that it's not possible, it is. It is very possible. Especially the fact that we haven't been able to get under there. I want to show it to you right here. That's bad news, right? Look at this one right here. Come out, squeeze up. This is a little bit late, but wham, straight down. Now, it's only one wick. You know, it's only one down. It's not two. But to say we can't, look at this one. We're underneath it, back under again really quick. Back above, straight down. So to like, there's like, I'll call it movement or volatility, but you got to at least be aware of it. Like to say, oh, we can't get underneath there. Oh, it's possible. You know, and I think I showed you this. So that's 80s, right? No, hold on. I'm not saying it's going to happen, but to say it can't happen, let's see where that is. You know, like we start fading this move down here after the fucking 30th, or even before it, right? You blood this down early, right? And then you start selling this shit down over here. And, you know, here's the 30th. And you just quickly, all the way down there. So, like, this is what I was trying to show you earlier was on my outlook here. I was like, hey, we could actually do this early, right? Come back up here. So this move right here could be an early down, up, right? And then you're down here all of a sudden. This is the 30th, right? Maybe one more squeeze up, then all of a sudden, like the 2nd, 3rd, and 7th, there's the 3rd and 7th. You're like wicking down here, you know, and you're like, that's why I'm saying, like, between, like, there's a bigger window this cycle. So don't discount is my point. I'm not saying we're going there. I'm just saying it's not a low probability. It's like 15% chance. That's not 5. So like 15, and then it grows as we get closer. So if we start making new lows, like it becomes 15%, then it becomes 20, then it becomes 30, then it's 35, and you're like, oh shit, are we gonna get down there just for a brief minute? You know, we're out of the fucking prior collar, and we can now like trade below there even for a brief minute. This is what the bears are banking on still. The bears still think they have a chance. I showed that to you in that SPX chart with the five things, right? Like seriously, that check back down there, right? It still eludes us in cash market. So, you know, like the algorithms are like really funky like that. They'll sometimes just like, they're like, oh, we're past all this. We're not going to print that. We killed all that shit. Sweep down there really quick. Fucking market's on fire for like 1 to 3 days. Nobody's seen. How many times have you seen that? And it's like just like fucking bloodbath. And you're like, oh God, we're all fucked. You know, and everybody's washed out. The pain trade's on, and then you look back in like a month or two, and it's just a wick left behind. It's like literally like a skinny little thing. You're like, oh fuck, I don't even remember that. That was horrible. I lost 30 grand. It was terrible. So you know, just like, not that we're trading that, just to say it can't happen is very low probability. It's still very high probability. Not only that, it's a very high probability because of this triangle right here, right? That triangle up there, right? You get a new triangle right here, and you want to make sure that that triangle holds, right? Still haven't done it, right? And like, there's a little tiny bit down there. Fuck those fuckers! I'm telling you, man. These fucking, like, you ever notice, like, you guys don't ever notice, like, they're just like grinding every last stop out. They take everybody, like, capitulation, and you're just like, oh my God, we're gonna crash, and I'm not buying this dip, and oh my God, it's terrible. Hair on fire. It's always hair on fire. So like, it's like it's a song that's sang a million times. I'm not bearish on that, but I do want you to know, like, if that happens, that you don't have your hair in fire. You're like, oh fuck, this guy said this to me. We're doing it right now, but he told me to buy the dip there, and he told me that we could hit that fucking number, you know, like a week after, 2 days after, some kind of stupid shit like that. You know, be aware of it. You know what I'm saying? Still going. All right, you guys have a great night. No, like, there ain't no way we're going down there. I'm like, oh man, every time I hear a bull say that, I'm like, I'm fucked here. Woo, new low. Yeah. Oh, what am I making? Oh, yeah. They closed that shit before I get paid. Shocker. I guess I'll be in the money tomorrow morning. See y'all tomorrow. Hopefully the fucking Euro rich and the Asian rich